So the outlook for inflation is absolutely key for investors. And what's been happening in the world in the last 10, 15 years is inflation rates have been steadily declining. I expect over the next 2 to 3 years that we're still going to have quite low inflation rates, that interest rates are going to stay reasonably low. We're in a period of QE, which is keeping bond yields and interest rates at low levels. What would change our mind? If we saw strengthening economic growth, strengthening retail prices in this country, for example, and strengthening wage demands. Those sort of things would push up inflation. But at the moment, I think we're going to be at a steady sort of level. So inflation and the rate of inflation is a very complex thing, and it's set by a number of different factors and agents. At the short end, central bankers have a big influence on setting interest rates, which affects inflation. Longer term, it's the markets, the growth rate of the economy, and the supply and demand dynamics in the global economy. And that's the key indicators of wages and raw material prices. And we're now in a period where, by and large, raw material and input prices are still quite benign. And what we're looking for at Jupiter is whether there's wage price rise to see if inflation is going to pick up. At the moment, we think the outlook is quite benign. Well, I think for you all out there watching, you've had great moves in asset prices. Quite a lot of asset prices are quite expensive. You're dealing with your clients who are looking at maybe 15, 20, hopefully longer years of retirement. And how are they going to generate the reliable income in a way that the capital is safe and not too volatile? And that's why Jupiter for many years has had a variety of income strategies, because income, if you look over the long term and you reinvest your income, makes up the biggest proportion of total return in savers' portfolios. So income strategies are vital as a component of a diversified portfolio. So we have a variety of different income strategies at Jupiter. We are a bottom-up active house, so we spend a lot of time analysing companies. How secure are the earnings profile? What is the dividend payout ratio like? What can shareholders look forward to in terms of return of income over a period of time? So safety and security of the business model is absolutely paramount. And we have a variety of geographical strategies, obviously UK income funds, European funds, and total asset funds and total income funds. And I'm particularly talking about the Asian income fund that's been going for a number of years at Jupiter. Why is that attractive? As we all know, it's a growing area of the world. Population of between 4 rising to 5 billion. People are getting wealthier. Companies are benefiting. More companies are being properly managed in terms of corporate governance. Payout ratios are rising. Dividend yields, we find many companies above 3 or 4%. That is attractive for investors.